So today we're going to look at what just happened with the budget 2025 happening earlier today, and I'll give my initial reaction, some of the key points in the budget, and then I'll also talk about some stocks that may benefit and stocks that may lose out because of what has happened in the budget. Overall, my thoughts are it's a tax. It's a we ballsed up, so you guys are going to have to pay for it. That is my thoughts on it. Basically, most taxes, if you want to have a drink, you're going to pay more tax. If you want to have a vape, you're going to have to pay more tax. If you want to earn dividends, you're going to have to pay more tax. If you go to work, you're going to have to pay more tax. If you want to pay more into your pension, guess what? You're paying more tax. That is the summary of this budget. They ballsed up a year ago. We all called it. We all said this is not going to work. And because of that, we've seen the slowing growth. We've seen them having to come to the taxpayers and go, come on, you got to pay up for our mistakes. And it's disgusting, isn't it? It's disgusting that we have to once again bail out a government that's inadequate of doing financial decisions ultimately. That is what the situation is. And what is frustrating is, once again, they come to the working class people, even the middle class, the people that contribute most to society from going out, working 9 to 5, going out every weekend and paying into the system. The people that are most important to this economy just have to keep doing the tax burden. I don't know how long it is until they realise you cannot tax your way to growth. The only way to get growth going naturally is to get people out there feeling good, going to work, realising they're getting more in the pocket. They're not getting taxed more. They go out into the high street, they see things not going up because of the inflation going up. And all they keep doing is what we saw 12 months ago, is causing inflation. We looked at the budget 12 months ago and went, this is going to cause a big spike of inflation. I remember saying that this is going to cause inflation to double. And what did we have? We had inflation double. And that's been the situation once again. We look at what they are putting in place and you're going, this is not going to be good for the economy. But it looked like they've slightly improved that from last budget. I don't think the budget was as worse as last year, but we're feeling the consequences. And certainly when I look at these situations or these things that are getting put in place, there's certainly going to be quite a few losers from this budget here. Now with this budget, the balls up started a lot earlier than normal. So what happened is the OBR actually released the figures before the budget, which is incredible. We actually had a good idea what was going to happen in the budget before Rachel Reeves started speaking at the House of Parliament. I mean, what a mess this budget has been. I mean, that was the summary of this government in these last year and a half, is unorganised mess. That is what it is. Chaos. Absolute chaos. The fact that the OBR had the figures put out there, I mean, obviously that's not exactly down to the government's fault, to be fair, but absolutely ridiculous. And once again, it just topped off the whole cycle, this budget. The fact that the budget has been so delayed to finally come out, the fact that we've seen so many things leaked to the media going, oh, would that go down well? Let's leak that to the media, let's see what happens. And they go, oh, that didn't get a good reception, let's pull back on that one. Let's leak that one out, what's that going to go down like? And we've seen hopping in and out. Yeah, income tax are going up, income tax isn't going up. It's unbelievable to see. And the planning from this government has just been absolutely terrible. But when we look at the OBR figures to start with, it wasn't pretty reading. So the downgrade to the 2026 growth forecast was to 1.4%. This was from the previous 1.9% that was expected for 2026. So another downgrade. I noticed that Rachel Reeves tried to take a victory in saying, we've just had an upgrade today for 2025 to 1.5%. Are we just forgetting that a few months ago, it was your budget that caused the actual GDP growth to get downgraded to 2% to 1%. So you claiming an upgrade today is still massively down from what you caused a few months ago. Let's not be ridiculous taking a victory lap here, which has been a common theme through the budget. I thought there was a few things said that was absolutely ridiculous where they tried to take a victory lap on things that they've caused and they've seen a slight improvement, but yet it's way down from where they came into power. We also saw unemployment rate. They were hiked up massively as well. You can see here that unemployment is going to see a big increase, which is never great. One of the reasons they're having to increase taxes so much is the increase in the welfare spending. Well, that's because unemployment is increasing. And once again, that's forecast to increase going forward as well. As we expect inflation, that they seem to have no control on or understand what inflation is. I think. We've seen inflation at the moment increased as well. The forecast is now 3.5%, higher than the 3.2% forecast in March, and as well for the next year 2.5%, higher than the previous 2.1%. which is not great. We said before, one of the key things that they need to get down is interest rates. That is a big thing. People's mortgages, once again, we go to the working class, middle class. What is one thing that they massively feel is when interest rates go up, when those payments go up on their cars every month, and those are increased by a couple of percent, massive cost to the wallet. If you look at the likes of the houses and mortgages, what is one big cost as well to people and the pockets? It's the increase in the mortgages. That's one priority that should have been put down a year ago and was increased by this government, and even now it looks like it's overhanging. And as well, the housing market, get the housing market moving. You know how many people benefit from a housing market being good, selling? The knock-on effect in the chain. You got the builders, the plasterers, the leckers, and then you have all the interior side of it. It's it's incredible how that is being overlooked by this current government. But then 26 billion tax raise. Where are they going to get that from going forward? Well, first of all, one thing they try to take out as a positive is the 2-child benefit cap is set to be scrapped. Few people looking at it as a positive, few people looking at it as a negative. In my opinion, I'm very neutral on it, to be fair. I don't have a strong opinion. I see the benefit of that. Obviously, it helps a lot of children get out of poverty, which is obviously great. The thing is, are people going to use that to exploit the system? If you are having 6 children, then all of a sudden you have a benefit of 18,000. Will that be then used to exploit the system? Potentially. Has it been thought through? Probably not. That's the summary of this current government. Would a better thing to be okay, we're going to increase it to 3 children going forward? Maybe so. From going to two children to uncapped, maybe a little bit of a jump there. I don't know. Like I said, I'm obviously a fan of children not being in poverty. Is this going to be abused, the system? Potentially. And obviously one of the things that they have at the moment is they already have a very high welfare bill at the moment. There also was another positive for the stock market, which is stamp duty. So if a company lists onto the UK stock market, there is going to be a 3-year stamp duty holiday for UK listed companies if you are to buy shares in it. That is a positive, I've got to say. That was one thing I listened to today and I went, actually, that's a good thing. I still think stamp duty on buying UK stocks should be abolished. However, I guess that is hopefully a little bit of a benefit to try and get a couple of UK stocks listed on the UK markets, because we do need some more listings going on in the UK. Stocks ISAs, cash ISAs. So 24 hours before the budget, there was a rumour going around that we're going to see the ISAs cut. What has happened? So 2 things. So you've got your cash ISA, you've got your stocks and shares ISA. 20,000 a year. 20,000 a year in your cash ISAs, you put it into cash, you get your interest rates, and you don't get taxed on your interest that you earn. 20,000 into your stocks, obviously then you go and make money on a stock and you sell it, you don't have to pay tax on it. Now, if you use your stocks and shares ISA rather than a cash ISA, you guys, no changes, which for me personally, and for a lot of you guys probably watching this video, as we cover a lot of stock market content, positive. That is great. We are not seeing a change to our 20,000 in our stocks and shares ISA. That was the one thing I got, the one thing I begged Rachel Reeves to do is do not cut the stocks and shares ISAs, and she hasn't. Cash ISAs. So that's going to get reduced to 12,000 a year, although you still have a 20,000 limit. 8,000 has to go into investments like stocks and shares. So what they're going to try and do is push people from cash ISAs into the stocks and shares ISAs. Not anything to raise any tax point of view, but puts people into investments because they believe, or Rachel Reeves, the current government believes, people are better putting in the stocks and shares ISAs because they'll get better returns. We'll see. I think there's a certain amount of people. I mean, there was a lot of protection to over 65s. They still have the 20,000 limits because obviously when you're getting later in life, you don't want to be taking the higher risks here. But yeah, is that what a lot of people will be willing to do? Will a lot of people want to take that risk and go into the stock market? Is there the knowledge out there yet? I don't know. So I think personally, I'm not a big fan of that change, but for me, it doesn't change that much. I'm just concerned about the people that would benefit or use a cash ISA much. As I always say, I would like to see the cash ISAs and the stocks and shares ISAs increased by inflation every year. That is one change that I am absolutely banging the table for. So many things, when it's other taxes, they increase with inflation, and we even saw a few changes this time round where things would change so they would go up with inflation. why do we not get anything from it? Once again, the people that are out there willing to invest the money to better themselves, to create wealth, and that wealth, then they will go out. If you make money in the stock market, as some of you guys will know this year, you go and spend it on a new car, a holiday. Why are we not rewarding the people that are taking the risks? This is what this government has lacked massively. You've got to reward the people that take the risks in investments and start businesses. That's how you have economies that grow. So that's my thoughts on that one. Next thing, income tax thresholds are frozen. So we have seen the thresholds frozen now to 2031, which will go past the current government that we have right now, unless they get re-elected, which is I am more likely to see probably a pig flying past that window than that happening probably after what has already happened in this first 18 months of them being in power. So some of you guys might be aware, might not be aware. I'm sure most of you guys are clued up if you're watching this video here. Income tax thresholds. So you've got the basic and the higher. First of all, your 12,000 that you have every year that doesn't get taxed, staying the same. And then your higher tax bracket, which is at 45,000 at the moment, that's staying the same. Now you might think that's not a bad thing. It is, because what happens is as you earn more, so if you're below the tax-free threshold and you enter the tax threshold and you go up more and more, and even if you get more and more pay increases, that chunk there you're going to be paying more tax on. So you might go, oh, I'm getting a pay increase. Well, that pay increase you're going to get taxed on. So yes, you're getting more money, but that now more money you're earning is now tax. You're getting taxed on it, and they call that financial drag. It's a stealth tax. People are paying more tax, and every time you earn more money now, you're getting taxed on it. So normally what we had before 2020, when this was introduced, is that you would see your wage increased, and normally the tax threshold that you would pay would go up. So you wouldn't the pay increases you were getting were some form of getting at least a tax-free allowance against it. But now, because that's staying the same, it's increasing massively that you're paying those taxes on. And we're getting to a point now where we're actually going to probably see minimum wage workers start entering the tax threshold, which is incredible. And then for the middle class, the working class, that start pushing up to 30, 40, 50,000, you guys, you start getting your pay increases now. You guys are going to start, any pay increases you guys are getting, you're getting whacked the extra 40% on, which is incredible to feel. So once again, you look at the working class and the middle class, you're thinking more money you're earning, basic wages are getting taxed, and especially the middle class that are getting that higher tax bracket, anything extra you're getting now, you're getting whacked an extra 40% on. Yeah, it is a stealth tax that is going to, really hurt people. You can get away with it, but the fact that we've had this stagnant for the last 6 years, and this goes down to the other government that we had in previously as well, there weren't any, much better than what we've got in now. The fact it's continuing now and set to go on for 2031, you're talking 11 years where tax thresholds have been kept the same. Imagine how much wages have been increased since then, and the cost pressures that have happened. No wonder people have less money to spend out there at the moment. Next thing, dividend tax. At the start of the video when I said this budget will be summed up by you earn anything, you're going to be paying more tax on it. Dividend tax. Dividend tax has been hiked, which is a blow to small business owners and investors. So there has been an increase of 2% on dividend tax if you are the lower or in the higher tax bracket. Higher rate taxpayers will go up from April 2026, will go from 33% to 35%. Yeah, that's an absolute stinger, because last year they went for investors on the dividend tax. They moved the tax-free allowance down significantly and increased the tax rates, and now they've increased the tax rates again. I thought they were going to be a lot kinder than this. I thought they were going to let investors have a bit of a year off, a gap year, but that hasn't been the case. Same again, I know sometimes people try and, expose the system a little bit and, tax efficient ways of paying certain earnings out from dividends. But you've got to remember the people here. So this higher tax rate on income allowance here is going to be on dividend, savings and properties. So obviously if you're earning stuff through like interest is going to get taxed more, property is going to get taxed more, dividends going to tax more. Some of those people are taking the risks. So for example, like if I went to go and invest in a UK company, let's call it I don't know, Domino's in the UK, right? Because I'm thinking of a company that's been struggling massively at the moment. Let's say I take the risk and I invest into Domino's, and I'm taking the money that I've earned, that I've already been taxed on, I put into there. I'm taking that risk. Now, the problem is if I take on that risk and invest in Domino's, I could lose a significant amount of money. Like the Domino's share price has gone down this year, and I get paid that dividend. Now, I'm getting all this lovely dividend here, but I'm getting taxed more on that dividend. And because I've taken the risk and it hasn't worked out, I've also lost a ton of my capital here because of the share price going down. So from me personally, I've taken on the risk to take on that investment, and that dividend I at least get, I'm getting taxed more on that, and then I've lost, a lot of the share price gain as well. And you just can't have that. People that set up businesses and get paid out by dividends, you're punishing them. People that have taken the risk and invest into property, you're punishing them as well. It's you can't keep taxing people that are taking the risk, because the people that take the risk will generate the growth in the economy ultimately, which you've got to be careful about. Luxury homes tax. So there was a luxury homes tax. Helps if I can spell luxury. Look at that. That's me fast typing while watching the budget. So homes that are valued, which is going to be a tricky point. Can you argue the case that a home is valued at 2 million? Or home is valued at 1.9 million. How are you going to do that? Are you going to go on Rightmove valuations, or are you going to have someone going around and valuing homes, and you go, well, we've got a bit of damp here and a damp here, so that takes the value to 1.9 million. Anyway. So homes that are valued over 2 million are going to be hit by a subcharge of at least 2,500 from 2028, called the mansion tax. So with this one, I think I'm pretty neutral on it. I think if you have a house worth 2 million, I think you can afford that tax. Once again, do you deserve to be taxed an extra amount because you probably have earned your money and then bought a property, and then you get taxed more because you bought a property? Would it stump people from buying higher value properties? And once again, we talk about the people that would have made, having a house sale, how many people would benefit from that? I don't know. Same again, I'm pretty neutral on this one. I don't have a high opinion compared to some of the other ones here. But that is something that they're going to bring in a few years' time. Salary sacrifice pension contribution. So if you do that over 2K, you are going to face national insurance charge. Same again, pretty neutral on that, because there's probably a few people that will use that to benefit them from a loophole point of view. Generally, I'm not a big fan of pensions in general, so I'm pretty neutral myself. So I won't say too much on that one. So custom duty to apply to all small packages in the UK. So if you are a Temu or a Shein user, you are about to see your products probably go up a little bit. What we've seen before is parcels under £135 can enter the UK without having to pay import duties. So we've seen the likes of Temu and Shein really use that and import at really cheap rates. Now we're going to start seeing the import rates on those parcels, so that's going to increase the cost of Temu and Shein orders, which could be a benefit to some of the UK high street and UK businesses and probably better quality goods. I have seen a few people argue the case, well, people on lower incomes will use those products and order from those sites because it's a lot more cost efficient, and they're now going to get hurt because of that. That's a good counter argument, to be fair. I personally like this one. I don't think we should be importing cheap Chinese goods that are terrible quality into the UK. And if we do increase the prices, that will once again put the money back into UK businesses, hopefully. And then because it's in UK businesses and demand comes up, more people are hired. We see, more tax created from the orders in the UK. And that hopefully benefits other people. Yeah, and half of these Chinese companies, and let's be honest, are using labour that's cheap as chips and probably other things that are going on. So, I'm not a fan of Chinese goods getting into the UK. So, yeah, I'm actually okay with that one. Electric vehicle owners, you are going to face a pay per mile tax. So, for a while, the big shout was going to get electric vehicles. They're going to be a lot cheaper to use. And then, as we always know, the government push this alternative onto you, and then they realise the one that they've been pushing you off because it's better for the world and the environment. They go, oh, but now we're losing a load of tax, so we need to get the tax back. So now we're going to throw some tax onto your vehicle so we can get it back from the electric vehicles. Yeah, we always knew this was going to happen. It's happened with, it was exactly the same when it was smoking and vaping, and they went, switch to vaping, it's a lot healthier for you, and then realised the amount of tax they were losing out, and then eventually we're seeing the taxes coming on the vaping side of it now. So no surprise there that that's starting to come in. Same again, I'm pretty neutral on that one. I think mostly because I knew that this was going to come in. I think it was one that was leaked way before the budget as well, to be fair. So we're all seeing the cost of vaping is set to rise significantly. Like we said just a second ago, there was the push onto the vaping being a lot healthier, and now they've realised there's tax that they're losing out because of that. So they've increased the prices or the taxes on vaping, and we're going to see a bottle of 10ml e-liquid will raise to £6.44. That was up from the price, I think that they're previously expecting, I think it was like £3.99 according to vapeshop.co.uk. So that's a pretty significant increase there once again. Alcohol is going to go up in line with RPI inflation going forward. So yeah, if obviously anything in the alcohol producers, pubs, obviously they're going to see a pretty decent whack once again because of that, and a continuous whack going forward. I've always, like I said, I've been a fan of things. I think the tax threshold should go up in line with inflation. I think the the stocks and shares eyes should go inflation. They don't, but as soon as it's taxes, yeah, we'll put them up by inflation. So a little bit of a tough time for them going forward as well. Big one, as we probably were aware of, taxing on, and I just want to add here as well, when you look at this cost of tax on vaping, how much do you think the black market's going to explode now? I think that's a real big concern. I think there's going to be a big increase on that black market. And made me think of that because we got getting onto the gambling side of it now. And same again, I think, you got to be really careful about the black market that's going to be created here. It's all right putting taxes up, but if you force everyone to go into the black market, you're then going to make no money on it. And it's probably not safe either, which is obviously what you don't want to have. So we're going to see the betting online tax go from, I think it's 21% at the moment, and that's going to increase to 40% going forward. So that's a pretty significant increase. I think at some point we saw the rumour of about a 50% increase. 40%, I still think, is an incredible hike from 21%. You're nearly doubling it there. I don't know why they just didn't increase it by like 5% if they really wanted to go for it, but significant increases, which is really surprising because I didn't write it down here. It's just coming to my head now. But there was something like they're reducing or scrapping the tax on bingo halls and in-person gambling, but then online gambling's going up. So I don't know what the thinking is really around that one there. And that is everything. Going on to stocks, is there any benefiters or losers from the stocks that I can tell here? Winners that came into my head was Hargreaves Lansdown and other investing platforms that were mentioned actually in the budget because of the change in the cash ISAs, which I've lost my slide for. Because of the change in the cash ISAs, we are going to see more people go down the investment route. And it sounds like they've been into contact with like Hargreaves Lansdown and other players about helping people invest into the stock market. So I don't know if they're going to create videos or like funds for people to invest in. I don't know. It sounds like there's some sort of partnership going on there. So you might see someone like Hargreaves Lansdown, HSBC, Lloyds, banks, investing platforms. They might benefit from that, more cash going into investing areas potentially. There was also an increase of £5 million for books for schools, which I think if you do work it out, it's like 250 quid or something per school or something like that, which, it does always amazing when you see the big figure and then actually you divide it, it doesn't seem much. But yeah, obviously an increase for some new books for schools, and I think mostly high schools. Potentially someone like a Bloomsbury that I hold could benefit from that situation. They obviously produce a lot of educational content. And then obviously we've got the ban on Temu, which might lead other lower budget companies like Primark, Boohoo, ASOS, cheaper makeup products potentially as well. They might see an increase now that the prices on Temu and Shein might go up. So you might see some of those lower priced consumer goods. They might see some benefit from that. We'll see what happens. Losers wise, I mean, obviously the gambling situation, the gambling tax going up is going to be a a massive hit for gambling companies. I'm very much on the fence about buying Flutter at the moment. And the thing that's making me a little, obviously I sold my shares in Gaming Realms because of this reason, and I'm glad I did. And I'm very much considering buying some shares in Flutter, but I'm looking at this tax increase on Flutter and gambling tax that's going on. And I'm like, oh, I don't know, how much is that going to affect them? Potentially housing, we see that this, from the figures that we've seen earlier, that potentially inflation is going to remain high. If inflation is remaining high, is the Bank of England going to be willing to cut interest rates? We don't know. So could we see housing stocks once again? It'll get a little bit stuck because the interest rates aren't coming down that fast. We'll see what happens there. We talked about the alcohol tax that is going on and also the vaping tax. So you could see a lot of them sort of producers, pubs potentially, and also vaping stocks, something like a Supreme, for example. I think those stocks could potentially see a little bit of a whack because of this. So those are potentially some stocks to keep an eye on. And overall, that is everything. That is my review of the budget of 2025. Yep, like I said before, it wasn't a good one. We knew it wasn't going to be a good one. And it was a budget of taxes on pretty much everything, especially the taxes on working class people, middle class people, and being like, you've got to kind of fill the hole. And you had a lot of things that were taxed on. I think anybody that wants to try bet themselves, unfortunately, once again, you have an absolute whack, which is the people that they should be supporting. You got to be supporting growth in the economy. You got to get people spending out there. You got to get people feeling good about what's going on in the economy, and you'll get more money coming in and people spending. You cannot tax your way to growth. And even though it doesn't seem as bad as the last one, to be fair, and I'm glad the ISAs are untouched, I still think there's a lot of work to go. And I think that as we saw in the OBR forecast, it's once again holding the economy back a little bit, which is certainly frustrating. So, yeah, that's the review anyway, guys. Thanks for watching. See you in a bit.